Hey, what's up, guys? Um, decided to just record this video randomly, as you could tell by the way I'm dressed. But sister and I were actually having a conversation about day trading, and that's something that I didn't know about when I was 18 years old at all. Never heard of it, never understood it, and she is in the same boat. So we're having a conversation about. It. Just wanted to share it with you all, and yeah, just wanted to share. So you were asking. Oh, by the way, she's sitting across from me, but again, like I said, this video is really random, wasn't planned, and so she, you know how ladies are, they don't like to be um, seen when they're in their home attire. You understand, right? Okay, anyways. So, I don't know how I look. I mean, I feel like I'm looking, yeah, but whatever. So, you're asking what's the point of the day trading, right? Okay. So, man, there's so many ways to go about this, but I'm trying not to make it like complicated because it doesn't need to be complicated.
Just put it in simple terms.
Simple terms. Okay. When people start businesses, they are considered private, meaning like you can go out here and open up a lemonade stand and you get your business license, you register it with the state of Hawaii, you pay taxes on the money you make from your lemonade stand. That's considered a business, right? And so, but you're privately owned because you own the lemonade stand and you're, the sole owner. You're the controller of what happens. And then as you expand, you can franchise it, yada yada yada. But at some point, let's say if you get large enough, you may decide that you don't want to own this company privately anymore, or you may decide that you want to sell it. Like so, there's two ways you can do it. So one, you could either say, "Hey, I need more money to expand, and I don't have that," and so you can basically incorporate, or basically turn it into a corporation, which is publicly traded. Or you could just say, "Hey, look, I want to take the company public. I'm going to sell it to Wall Street, and you're gonna be obviously a majority owner in it, and then make your money that way." Excuse me. So what happens is, either way, what happens from there? There's a whole. I think it's almost a year, maybe even 2 year process, depending on how large your company is. But at that point, you have so many shares. So let's say you have 1 million shares of lemonade stand, right? And so with that, I don't know all the details of the process as far as how they divvy up, but I just know that the people that found the company, the owners, are going to have like majority share, or they're going to have majority of those shares initially. Now, whether they decide to sell it off or hold on to it, I think you have to have at least 50 or 60% of the shares, or you have to be at least the largest shareholder to be considered a majority shareholder. That way, you can still control the company.
Okay.
But also with that, it's like there's no longer just a when you decide to go as a corporation, there's no longer just you, the owner per se. Now they have to establish a board of advisors, and they're responsible for being, I guess you could say, concerned with the price of the shares, because the more the share price is, basically the more money they're worth, the more the company has, and yeah, so that's what happens when you go corporate. So now let's say you're now Lemonade Stand Corporation. You're no longer just Lemonade Stand on the sidewalk, right? So now you're being traded on Wall Street. It's basically like if you hear of like the Dow Jones, the Nasdaq, and there's one other one. I feel like the S&P 500, right? So those are basically the top 500 best performing companies in America, basically, if not the world. That's what they are. So when you, as an individual, say like a company like McDonald's, you could buy a McDonald's franchise and own that and operate it. But you could also buy, let's say, I don't know, 1 million shares of McDonald's stock if it's available, and then you might become a majority stockholder, and then you would get invited to their meetings, board meetings, things like that. You would have some say so, or at least a voice on the future of McDonald's, and so that's where you think of people like Warren Buffett, right? Warren Buffett doesn't own Coca Cola, but he owns so many shares of Coca Cola that it's like he has the controlling vote on what's going to
What's
happen with
happening?
Coca Cola, right?
Yeah.
So that's just money.
Right.
So, but obviously that's created a market, right? And so with these shares, there's I guess you could say, a central person between the company and you, uh, the trader or the individual, right? And so Wall Street, I guess you could say, would be that middle person, the brokerage, if you will. So Wall Street is where the company, their shares are, and then you, the buyer, buys the shares, right? So you get the share, company gets the money, Wall Street takes a percentage, right, for putting the deal together. And then same thing when you decide to sell your stock, because you can sell your stock anytime as long as it's worth something. So you put your sell order in, Wall Street finds a buyer for it. Someone buys the share, they give you the money, and they get a piece of that commission, right? A little small commission fee on that. So what's happened though is obviously there's millions and millions and millions and millions of shares available for all the different companies out there, right? And most of us don't have enough money to buy a whole company anyway, just via shares, right? So, but the stock market is very active from about 9 a.m. to, I want to say it's 4
Four.
p.m.
Yeah. It's
Yeah,
9 to 4.
9
Yeah.
a.m. to 4 p.m. Eastern Standard Time.
Right. Yeah.
So during that time is a lot of activity. Like
Mhm.
there's just, I don't know, it's probably hundreds of millions of trades going in of people buying and selling stocks all day long, right? So during that day, that is what affects the stock price, right?
Okay.
And so that stock price is affected by the news, overall, they could say consumer um, emotions, how they feel about the company or how they just feel about the economy as a whole. If there's any type of tragedy, right? Maybe, I don't know, if like the BP oil spill, right? That's going to affect tourism for a while in that place. So I don't know if you got stocks in, I don't know, Louisiana beach condos, then you
Mhm.
probably expect that stock to fall a little bit, right? Because everybody's like, oh my gosh, the oil's here, tourism's gonna go down, sell, right? Or you might go, hey, Apple is coming out with I don't know, the newest
Laptop or something.
iPhone or something. Well, I'm thinking like back in the 2000s, like when it
Oh.
first came out, like
Okay.
this smartphone thing, and people are like, what is this,
Mhm.
so you just like, man, we just dropped the iPad. It's like, man, what's this iPhone? Oh, I can't wait to see what this is. So you're like, let me buy some Apple stock because I think the price is gonna rise.
Rise. Yeah.
Yeah. So with day trading, all you're doing is looking to make money with the changes in the price, right?
Mhm.
So ideally, you're looking to buy a stock at $10 and sell it at $15, right? But day trading, by rule, you're supposed to sell all your trades off by 4 p.m. or close of business that day, is what's called COB. So meaning that if you're truly a really professional day trader,
Mhm.
and that doesn't mean you necessarily need to work for a company, but that means all your trades are supposed to be closed by the close of business each day, right? So each day you open with no trades, and each day you close with no trades. But during the day, you might make three, four, five trades or no trades at all, right? And that would be based on what you see on the market, right? And so um, there's a whole bunch of, I guess you could say, patterns. So you ever seen like, let me see here. Maybe I'll just show it on the TV because I'm recording. So normally I would show you on my phone. Well, actually, I can see your phone. Can you see your phone? Yeah. To Google, please. Okay. So let's see. Let me see. Stock chart. maybe that might show you. I just wanted to show you what it looks like, really. Okay, yeah. So that's what it looks like, right?
Yes,
So I
yes,
don't know if you guys can see that. Yeah, there we go. So all we're talking about is just these, how the stock price goes up and goes down. So when we look at this, all this is representative of price for a particular stock. This one just so happens to be Apple, right?
yes.
So we can see Apple goes up, goes down. So ideally, if you did this perfectly, right? You know, obviously none of us know the future, right? But ideally, you would have bought down here at the bottom, right, and sold up here at the top,
Right,
right?
because you're trying to get as much money as you
Exactly, exactly. So I show that's on here too, guys. I don't know if I can show it. So ideally, man, this is hard showing it like this way. But ideally, she would have bought there and then sold somewhere up here, right? I mean, if you just knew the future, ideally that's the goal, right? And then the same things you could also sell the stocks as well. It's called shorting. So you could also buy at $70, short it, or i.e. sell it at $20 and make money as well if you decide to go short versus long. And so there's a whole bunch of they have two types of mindsets. So they have technical analysis and fundamental analysis. So technical analysis is just surely looking at charts like that, and there's obviously a bunch of indicators. They have like a 50 EMA, 20 EMA, 3-day EMA, which is basically a moving average. So it's basically a line that goes across the chart that gives you an indication of, let's say, the past 50 days, the average price of the stock, right? So it'll show you that. And then for 20 days and for 3 days, right? And then you have that going across. Um, they also have what's called like a MACD. I forget what was the actual technical term for it. It's called MACD. Some people use that, and I think that's really it. Some people also have oh man, I forget the last ones. Give me, it's been a minute since I've looked at trading. We'll come back to that last indicator. But anyways, there's just like 20 different indicators that people use to determine what they think price will do. So when you were asking about day trading, like I said, that's just from day to day, and those people are looking to make a profit every day, basically. Yeah. So, but you also have what's called swing trading.
Yes.
So swing trading, all that is just over a longer period of time. Usually, swing trades can be anywhere from a week to a couple of months to even maybe a couple of years. But usually, you're talking weeks to months with most swing traders. So maybe you might check the charts on Monday, and then maybe Friday of the week you might make like one or two buys, and then you might leave it there for 3 or 4 weeks based on what you're seeing. And then I guess knowing that your charts, you can look at them however you want. So you can look at 1 hour price changes, 2 hour price changes, 4 hour price changes, 5 minute price changes. You can look at weekly, monthly, and yearly as well. So you can really expand it out. Just look at it yearly price changes, monthly or weekly, based on what you're trying to trade. So if you're looking at day trading, you might look at a daily chart. You might have like a weekly chart in the background, a 4 hour chart, 1 hour chart, and then like maybe a 15-minute chart, a 5 minute chart, right? And so you would just have these different charts that you would be looking at, because um, the way it plays out is everything happens on the small chart and then it plays out on the bigger chart. But the bigger chart moves a lot slower, so
Slower,
it's a lot
yeah.
lot less noise. So if you
Right.
think of it as like the hour or 5 minute chart is like a like a jet ski in the water, right? It's just as soon as it turns, you just go around and figure eight like no problem, right? And then like let's say the 1 week chart might be like an oil cruiser, right? It's like you can turn the steering wheel whichever way you want, but it's gonna take a long time for this ship to turn, right? Like you got plenty of warning when this ship's turning, right? Um, so that's how the charts are as far as the time you have to react to the market. So the reason why I share this with you though is because for you, you can make money by day trading, and
How
um, hmm,
how much money does a day trader usually
that's a
on
great question.
average?
I don't know if you guys heard that, but she asked how much does a day trader make and what's the average. So that is a question that does not have a true answer. Man, I'm
Because
trying to
that
think of
sounds
a.
hard because you're trying to make profit every
It
day.
is hard.
Yeah, you're making profit every day, so it's different. It's fluctuating most of the
it's
time.
it's like asking how much money do you make in business, or what's the average profits of a business. You know what I mean?
Yeah.
So it's like on one hand you could have what Apple and make $167 billion, or it could be the guy next door that's went bankrupt, last week, and everything in between, right? So with day trading, um, I would say more percentage would be a better way to look at it. So there's a million different programs or strategies out there, but the one that I've seen that shows up a lot more is that people will trade. Well, and then you understand too that there's different markets, right? So you have the stock market, you have forex trading, foreign exchange, which is basically currency trading, right? So changing the dollar to the euro, or the euro to the yen, yen to the Canadian dollar, all that stuff, right? And there's a whole market, there's a whole trading market for that. So forex, stock market, and then they have penny stocks as well. So they're basically stocks. I think it's less than a dollar. They call it OTC. They're basically like over-the-counter stocks. Um, but there's a lot of profit potential in that as well. But there's a lot of downside too. So I guess to answer your question, on the highest end of, I guess you could say, trading per se would be George Soros. I think Donald Tepper, Tepper, Donald Tepper, George Soros, Ray Dalio, Dalio, which are all hedge fund managers, right?
Okay.
They all have consistently over the past decade made over $1 billion in income year after year, or clearly close to a billion with the B in income from trading. Now,
In a year.
obviously, yeah, in a year's time. So they're not day trading per se,
Okay.
but they are trading stocks in different instruments in the market as hedge fund managers, and most of them charge a 4% fee, management fee, and they also get 20% of the profits that they make each year.
20%.
Yeah, and they all probably have at least a trillion plus in um, assets under management. So that would be the top, if you would say, as a day trader, or in the market as an individual per se. Now, granted, he does that with a company with other people's money. If you're talking like an individual trader, like just you by
Self,
yourself,
yeah.
not anyone else, I think somewhere around a million, couple million a year. Don't quote me on that because I don't know everybody. But I would say a couple million because uh, there's limits per se. So for one, there's mental limits, right? Um, it it sounds really great in theory, but there's a lot of emotion involved. Uh, there's a lot of self discipline involved with it. So it's one thing when you have, let's say, a $10,000 account, and each trade is, let's say, worth $100, and you watch your price go up to 105 and it goes down to 85. That's not a bad day, and maybe you make $100 that day or for the week, and you go, that's cool, man, that's gas money. It's a whole different thing when now, let's say, you got $100,000 account, and now that same swing just went from $1,000 to $1,300, and now it's down to $800, right? That's a huge. Now you're talking, okay, this is a car payment
Yeah.
that it was the same shift, but now you've got a bigger amount involved with it because it's a larger account, and that's a whole mind shift sets. And when it comes to being able to handle that, right? So it's a whole process there. And so you're talking 3, 4, 5 years, maybe even more, for that adjustment to go, let's say, from a $100,000 account to a three, four, $500,000 account. And it's not even necessarily if you had the money per se, but it's more so the mindset of being able to still treat your trading strategy the same, whether it's a $10,000 trade, $100 trade, or a $50,000 trade, to trade exactly the same way based on what you see. That's a very challenging to control your emotions that way because we're not taught that at all, right? So, but the reason why I say with that because um, you being your age, you're gonna come across 10, 20, 30, 40, 50 grand, and you're not necessarily gonna know what to do with it. And so society teaches us, either buy a car, which is a liability, doesn't put any money in your pocket per se unless you're a Lyft or Uber driver, or use it as a down payment for a house, which is nothing wrong with the house, but again, it doesn't pay you any money. So with day trading though, I look at it, and this is just me, from my experience. You could put, let's say, $20,000 into a trading account, and with the right strategy, you could make, let's say, I'm thinking maybe, I look at it as like 1%. So with that, you could make, let's say, $200 maybe a week, or maybe a month, depending on how you trade, right? A combination of day trading or maybe swing trading. You could maybe make $1,000 a month with 20 grand in there. Like that's how I see it. Is roughly about 1% of your account. You can make, let's say, 3 to 4 really great trades a month. So I would say, whatever your account is, I would say if you're really paying attention to what you're doing with trading, you could make 3 to 4% of that consistently. So if you had $1 million account, you're looking at what, $30 to $40,000 a month from $1 million account. Now, like I said, this is not um, because it's based on your skills. So you might try to make 1% or one good trade a day, or
Yeah.
what I mean, three. You might try to make 3 or 4 good trades a week if you're trying to do it actively. And people do that. I just look at it as long term. There's very few that can sustain it. Like people can do it for 2 or 3 years, but then the market changes, and then all of a sudden the strategy they had doesn't work, and then now they got to shift, and if they haven't been staying on top of it, now they got to kind of start back. And then the also other thing is that once you get it mastered, then it's like you kind of want to do something else. Because from my understanding, it's pretty boring. But I want you to know this because it's something that I did it when I was in the military, but I didn't appreciate it. So I would buy stocks, and I think my first year I did $2,000. The second year I did 5,000, and then my last year I did 10,000. And then the year after that, I started playing around, taking trips, and I probably could have made like 17,000 that year. So, and then when I first re-enlisted in the Navy, I got $45,000 up front, and I didn't even know how to buy stocks, but I just was like, man, I should buy some gold, like. And at that time, gold was trading at $800 a share. Um, and then I think the last time I checked it was like not even a year later, it was at $1,700 a share. So I would have doubled that 45 to 90 grand. But they don't teach us this in school, so that's why I want you to know about it because I'm like, I guess you could say that could even be dumb luck, but just by paying attention to the market, you'll see certain, excuse me, opportunities like that come. And I was on appointment anyway. I was going to use the money, so I just would have put $45,000 in the gold, and it would have went up to roughly about $90,000, $95,000. Would have came home, sold it, and made an extra. I would have doubled my money without any extra work, just from having the knowledge of knowing how to trade and buying the right stock.
Yeah.
Right. So, have you ever heard anything like that?
Anything like what?
Like that? I mean, like the trading. You know?
Oh, in school?
Yeah.
No.
See, this is what I'm saying.
No.
But this is what. Um.
So now you're talking about
Yeah. This is what. This is one of the ways money is made in America. You know what I mean? Like Warren Buffett, he's worth that much because of stock trading. Not saying he does day trading, but he's in the market. And
Mm-hmm.
same thing with the companies like, let's say, like Amazon. It's huge, but it's only worth that much because they're a public company and they're on the stock market, and that's what drives the price up as well.
Mm-hmm.
So that's the real reason I want you to know about it, because um, when you come across 10, 20, $30,000 or $50,000, that's something you could do, and you don't necessarily have to be an active day trader, right? So there's different strategies with it. You could be a like I say, you could be very active, trying to make profit daily, which is most of those guys, they're trying to live off of that money, and they do quite
Yeah.
well. But also, you could also do it long term as well. So you could say, and I mean, you could. There's tons of videos, or there's tons of stocks you could just go look at the prices back in the day. Like I know Monster was one I saw. Like if you would have bought, let's say, wait, let me see your phone again. I'll tell you the numbers. Let's look up Monster. So we'll just stick with the let's see, Monster stock chart. There we go. So we'll look up Monster stock chart. Let's see. Let's go with Max. Okay, perfect. Man, I wish I could. Wish this would turn for me.
Yeah, it's slow.
Oh, you got the screen thing. Oh, you got a lock. No wonder. I'm like, oh, this would be nice. Okay, so guys, we're looking at the. You can look up monster.com stock chart. Just zoom it out to max, and all we're doing is looking at Man, this is so hard. There's gotta be a fancy way to do this. But we're looking from here basically up to there, right? So, anyways, you look here, uh let's say 2000, what was this? 2006, yeah. So 2006, you bought, let's say, I don't know, $10,000 worth of we'll just keep the numbers simple. We'll say you bought $3. Yeah, we'll just keep it simple. So we'll say you bought 10,000 shares of Monster stock in 2006 for $3. You see that?
Okay.
So, and you just left it there. You forgot about it. You're like, you know what? I'm just moving on. I'm gonna find another way. And then, say 10 years later, you bought it for $3 a share, right? 10 years later, you didn't do anything for Monster. You never drunk the drink. You just thought it was a nice, interesting company because you saw a couple people at work drink it. Now the stock is worth $55 a share in 2016. So how much money is that? Do you know? Okay, so where's your calculator? Okay, and where's your calculator? I don't want to go through all your stuff, so you just pull up the calculator in there. Yeah, I got mine on my home screen. Okay, so $3 a share. We said we bought 10,000 shares, right? In 2006. That cost us $30,000, right?
Alright.
Something you can manage to come up with, right? And let's say you forgot about it, right? And 2016, now it's worth $55 a share. Over half a million dollars. Yeah, so you took $30,000, turned it into over half a million dollars with a long term strategy of just buying and holding a great company
Yes,
within 10 years. If you divide that up, let's see, what's 10 times 20? Yeah, so that's 120 months. Or you would have needed to save $4,500 every single month for 10 years to get the same result. Assuming if you didn't have it in any type of, which really savings nowadays is just basically negligent. So yeah, you would have basically need to save $4,500 every single month. Or you could have just put $30,000 away, bought monster stock, and 10 years later, it's worth over $500,000. Most people are trying to put money into a 401k and hoping for $500,000 after 40 years of work or 35 years of work. You did it in 10 by just purchasing a great stock with 30 grand, and you didn't even put any other money in there. So that's not including like dollar cost averaging, where it's like you continuously buy the stock as it goes up and down, so you can pay the lowest price possible. Which with that, I'm pretty sure there might be calculators out there for it, but you may have been worth $700,000 to $800,000. So that's why I show you this, because like, how else would you have been able to come, let's say, with like $500,000 in 10 years from $30,000? You see what I'm saying? So that's why I'm like, you could, for one side, you could take the $30,000 and let's say maybe make 300 to maybe $500 a month that whole 10 years. And so with the 5 times 12, that's 6,000 times what, 10 years, that's $60,000. So did I do that math right? Yeah, so 6,000, what I say, 5 times 12, yeah, 6,000, 6,000 times 10 is 60,000. Why am I feeling like that's not right? Yeah, that's 60,000. So that, you could take the 30,000, made 60,000 with it over 10 years, right? And you still would have the $30,000 plus the extra 60 that you made. You could have put the 30,000 in the monster stock and just left it there and not touched it, and then 10 years later had over $500,000 of money. Or you could have took the $30,000, bought a car with it, which 10 years later you wouldn't own that car, or if you did, it would be falling apart anyway. Or you could have put that $30,000 down, bought you a house, but now 10 years later you still got to make a house payment. The house needs to be renovated at that point. You probably need a new roof. So now you still got this bill where you got to put money into it. So that's why I'm like, I really want you to see this one. I want you to know about it, because it's one of the things that I didn't know about when I was a kid, and I had to figure it out. And once I figured it out, I was like, why didn't anybody tell us about this? Like, well, that's a great way to put it. But anyways, I've talked enough. Any other questions you got on this? I'm pretty sure you got a lot, but no, you good. That's it. Okay. All right, guys. That's the conversation with the sis. She's pooped. She's tired of talking about day trading now, but just wanted to share with you guys because it's like I said, it's something I didn't know about when I was a teenager, and I probably would have benefited actually from buying Monster stock. I didn't even think about it myself back then, but that would have been a great move for me. And I'm pretty sure though, there's another whatever company out there now, Monster, that 10 years from now would be worth way more than it is today. So whether you're doing day trading, whether you do a buy and hold strategy, but just make sure that you take time to understand what the stock market is, what day trading is, swing trading is, buy and hold, what the penny stocks are, what forex trading is. At least have a knowledge about those things so that you can make your own decision of whether or not you want to participate. I highly recommend it, because here's the thing: um, if Wall Street's having a bad day, or if Wall Street's not doing well, no one in America is doing well, because that's how our economy is set up. So there's no need to be afraid of trading, because, like I said, if you look at any of our depressions, even back to the 1930s, it all was regarding Wall Street. So yeah, so if Wall Street ain't having a good day, nobody else in America is, business is shut down. So there's no need to be afraid of it. You might as well learn it, understand it, and I guess I'll leave you with this example. I can't remember the guy's name, but there was a movie about it called The Big Short. You can look that up. But 2008, 2009, everybody know, you've heard that people lost all this money in real estate. Everybody went bankrupt. Well, this guy, I think, became a billionaire, if I'm not mistaken, or pretty close to it, in 2008, 2009, because he saw the crash coming and he shorted it. Him and a few other guys made multiple millions, hundreds of millions of dollars when the crash came because they saw it coming.
Oh,
So they basically shorted the the economy when everyone else was bullish, saying, "Yo, prices just gonna keep going up," and then they shorted it and was like, "Nah, we see that this is on a faulty foundation. This whole thing is getting ready to collapse." And when it collapsed, they made hundreds of millions of dollars. So that's just proof in the pudding that if you understand the market, um, then you can make a killing when these things happen. And not only that, but you can protect yourself too from it, by just understanding what's going on. So yeah, that's why, like I said, I want you to know about it. Um, and then I'm pretty sure we'll talk more in depth at a different time, just so you can be, I could say, fully knowledgeable about it. Because I want you to actually make like a conscious decision yourself to be like, yo, I'm not interested or I am interested, But I don't want you to, let's say 10 years from now when you're 30 and you meet some guy or some gal that's been making millions or hundreds of thousands for years with trading, and you're like, what? You do who? You sit at home on a laptop and do this? Like, whoa, wait a minute. Like, you know what I mean? So I'd rather you be like, oh yeah, I do my thing, or oh yeah, I take my money from my business and I'll do a little swing trading on the side, or yeah, I've been buying Apple stock or Google stock or Amazon or whatever it is for the past 3 4 years, and now that money I put in there has been quadrupled or maybe even exponential, right? Because I think Warren Buffett, his company, there's some of their shares are like $100,000 a share, like a stock. You know what I mean? Like imagine when it was like, because the guy's only 80 years old, so he wasn't. You're talking maybe 40, 50 years old. The company might be. I mean, he didn't start off as a billionaire, so you thinking like, man, you bought it when it was like $5 or $10 a share or whatever, and now it's worth $100,000 a share. I mean, that's an extreme example, but even like Apple, I don't know what it's trading at, but the last I checked, it was like at $900 a share. And you thinking, okay, you bought that when it's $5 or $10 a share, and you put 10, 20 grand in there. So it's like on one side, you could, like I say, just buy your car, go take you a trip to Cancun. Well, on the flip side, it's like you figure out how to make 10, 20 grand on a regular basis, uh, extra savings, and you buy, let's say, 5 or 10 really decent or good companies that have a great trajectory over, let's say, the next 10, 15 years. Um, and you think about that potential, like what if you just bought like 3 or 4 different monsters, like equivalent of the stocks, or you just dumped like more money into it. Instead of you put 30 grand, you put 60 grand or 90 grand. Now it's like 1.5 million. You know what I'm saying? Right. So it's like, how else would you take $100,000 and flip it to like 1.5 million in 10 years? You could do it with real estate. Don't get me wrong, but like you weren't actively working in that. You just literally just bought the stock
right.
and then just hung out, went and lived your life. Now, I mean, there is something to be said to say, hey, you had to be successful enough to be able to part ways with 30, 40 grand, know that it may not work or that it could go to zero, technically,
Yeah.
and you would have to be okay with that. But most of us, especially in our lifetime, especially with you have me as your big brother to mentor you, you gonna have extra 10, 20K every year to invest with. So, and really, you should be like aiming for like 100K a year to invest with. Real talk. So, yeah, 100K a year. That's what they don't tell us. And I've spent a decade learning these things. So that's why I'm like sharing it with you and also making a video because I want to share with the fam too as well because these are things that took me a long time to learn. Like even just basic um, things like a certificate deposit. Like you know what a CD is? Well, I think we went over that, right? Certificate deposit at the bank.
I think so.
Yeah, you know what it is. Can you explain it? Can you
No.
explain it?
I don't think
See,
I can.
see. So I mean, but it's, I mean, I'm not trying to social intelligence, but it's basic level finance, and it's not taught at all. You know, what I mean, you graduated with honors. You see what I'm saying? Like this is,
Yeah, they don't have any financial class or
yeah,
anything
yeah,
in school. I wish they did.
right. You see what I'm saying? Like,
Yeah.
okay, you just graduated with honors, but you don't know what a CD is. Yeah, no, I mean like a certificate of deposit,
Yeah.
right at the bank. You don't understand what that financial vehicle is, but somehow you're supposed to go out here, quote unquote, and provide for your family. How? They didn't give you a chance. So basically, certificate deposit is the bank holds your money for a year up to 5 years, and they guarantee you an interest return for you not withdrawing your money during that time. So that's what basically what a CD is. So you could put, let's say, $100,000 in an account, and usually it's a lot smaller. Most for most people, you put $1,000 down, $10,000 into an account, right? And they say that 6%. So at the end of the year, they say if you leave this $10,000 in the account, you don't touch it for a year, 2 years, 3 years, whatever that time is, then we'll give you back $10,600, right? And for most people, they go, oh, okay, that's great, that's cool. Nowadays, CDs are, I think, maybe 2, 3% tops, if that. And when you count inflation, it's like you still might be losing money by leaving that in there. But it's like, you know what I'm saying, just basic stuff like that, they don't even teach. So that's why I'm like, on one hand, we got to teach you how to make money, right? And make more than what you need. But then when you get the excess, right? Because we all get excess at some point, whether it's extra thousand, extra 10, 20,000, 100. Now it's like, okay, all you know is liabilities. Like all you know is car, house, vacation,
Food.
food. You know, just you know how to get rid of the money,
Right.
but you don't know how to employ the money to work for you, or you don't know any opportunities where you could put the money and potentially have it, let's say 10x, because that's more than 10x. 30 grand to what,
550,000.
550,000 in 10 years, like that's a exponential type of return. That's ridiculous, but it happens, and it happens on a regular basis. So this is how someone, let's say over a 10, 20 year, could work at one place, still be stuck, still live a check to check, and somebody else that owns a business or that has access to information like this and actually executes on it could be, you know, taking all these trips, flying private, owning a yacht or owning 3 or 4 different houses across the world, and you're like, how does this happen? This is not fair. And it's like we don't have this information, so that's why I really want you to know it. And like I said, I just spent. It took me a lot of time. I mean, I read books, went to seminars, just pick people's brains, just things that I hear too. Like just yesterday, I sent you the video
Mhm.
by the way. Just yesterday, I actually, uh, what was it? Yeah, I went to the house. It was on the beach in Hawaii Kai area, and the listing agent, when I was getting ready to leave, there's because it was a broker's opens for all these agents, and the agents, I don't know, they were just being nosy, but they kept grilling the guy, you know, about like, okay, you know, who owns it, and like is he married, you know, family, blah blah blah, and then they're asking if he lives there, you know, and he told them like, nah, he lives here part time. He has a house. He has this house. He has one in Australia and another one in Japan. I'm like, nobody told me that when I was in high school. Like nobody. And when I was in high school, like okay. You just graduated high school. What do you think as far as what you've been told? Aside from me, what do you think you've been told as far as like owning a house, things like that? What's your thoughts on
Lots of money
it?
now.
Uh huh.
You will have to work really hard to earn a house or
Okay.
buy your own house here because Hawaii is expensive.
Right. Hawaii's
Or
expensive.
or they will say to um, go to college, get a really good job to get more money.
Go to
So
college, get a good job, get good money. Okay.
yeah, but that's about it. If you're trying to get like a house for yourself, they'll tell you to
You
save
guys might
money.
talk. You might have to talk a little loud. I don't know if they can hear you, but I'm gonna put you on though. So you said, hold on. So you said, okay. I don't know if you guys can hear or not, and I don't get live feedback because I'm recording. But so you said, uh, it costs a lot here in Hawaii, which it does to buy a house. It's expensive.
Yeah,
You also mentioned that you're supposed to go to college, get a good job, so that you might work really hard, right? And what was the other one you said?
that's all I said.
Oh, that's it.
Yeah.
Okay. So yeah, that's what I was told too. But I just told you there's a guy that has a multi-million-dollar house on the beach, 115 feet of beachfront, all to himself. I mean, obviously, Hawaii's beaches are all public, but he's got really more or less exclusive access with his neighbors to it. And he also not only owns a house there, but he owns a house in Japan and Australia. You see what I'm saying?
Yeah.
And we don't know who he is. And he's probably not a celebrity. And there's a 99.9% chance that he's not on YouTube, never done a podcast, never will, and never be on the news. Like, we will never know who he is. Ever. But he's guaranteed probably a business owner of a couple businesses, right? Probably has some investments, whatever that may be, and living his life. So that's the things that I start seeing when I was like in the military, and I'm like, wait a minute, I'm doing all this stuff, and there's people out here with three houses in different countries. Like, wait a minute, how do they do that? And it's from understanding things like this. I'm not saying he's necessarily a day trader, but I guarantee he probably has some investments in some stocks or some businesses, right? Um, but it's just understanding that, and then when you look at like what we just talked about with just that one thing with Monster, from 30,000 to 50 to half a million, and I told you if you were working to save that much money, you would have had to save over $4,000 a month for 10 years to make that same amount of money. How could you compete? How could someone compete with you if, let's say, you bought that stock 10 years later, you're only, let's say, you're not even 30 years old yet. You're 28. You sitting on $500,000. Somebody else that's been working alongside with you, let's say, you got a $30,000 signing bonus. Uh, yeah, we'll just keep it really basic. So let's say you got a $30,000 reenlistment bonus at 21 years old from being in the military, right? So you got 30 grand up front. I did it because I got 45,000 up front. So that's doable without even any magic, right? You just work really hard. And let's say you bought the monster stock, you left that in there and forgot about it, right? You didn't go out and buy a car. The other guy went and bought a car. You both worked just as hard, right? 10 years later, you sitting on $550,000 with the price still going up. If you don't sell, right, it's still going up. This other guy, now y'all both about to re-enlist again because it's been 10 years, so you probably would have re-enlisted already. But let's say now you're 31 years old, you're getting ready to re-enlist for $100,000, right? But you already sitting on half a million. How could that guy compete with you when he's got, let's say, 5, 7 grand in the bank? You got half a million, and then he's gonna take that 100,000, get rid of the debts that he accumulated over those 10 years. You, on the other hand, you're gonna take that 100,000 and you're gonna do the same thing. You're gonna take that 100,000 and turn that into 2 or 3 million by finding, because you've been watching the market. You got another monster company that's coming up. You're gonna leave that in there. So when you retire let's say 40 years, well, so at 40 years old, after doing 20 years in the military, just with that one strategy, you got, let's say, $3-4 million net worth plus your military retirement. The other guy has got no, let's say, maybe 5-10 grand saved up. Maybe guys act together, because usually get to act together close to retirement. So let's say he's got 30 grand saved up. You got 3, 4, 5 million saved up. You both work just as hard as the other. Both worked hard, both make the same ranks, both got the same bonuses, but you invested yours, he didn't. You're a multi-millionaire, he's not. That's how valuable this information is. And that's what I want you to like gather, because it's not necessarily working harder. And that's what I've learned. Hard work is a component of it, but it's not the whole thing, you know?
Yeah.
And it's like you got to understand the strategies. And when you understand the strategies, you start to realize that if you do and exercise certain some of these strategies and you're actually consistent in it, the money that is made is exponential, and you didn't necessarily work harder than the next guy. You just made smarter decisions with your money. So that's what I just wanted you to. And like I said, state trading just one of them. You know, you still got real estate investing. Like I say, you still got the buy and hold. Then there's also, of course, if you want to start your own business, then you still got sales. Still got different tax shields that you can use to hide yourself, and it's a whole different conversation. But the point is, it's it's stuff that we aren't taught in school, and if you don't take the time to learn it on your own by reading books or watching YouTube or podcasts and things like that, you'll never know, and you just be like I say, you'll be like that guy that worked the same job as the guy that invested, but he didn't invest his money, and now he's been working for 20 years, doesn't really have much to show for it. Other guys are multi-millionaire just from using different strategies. And all it is access to knowledge and then executing on that knowledge. So, yeah. So, any questions on that though? Okay, we'll talk more later. Well, all right, guys. Anyways, that's the conversation. Just wanted to share with you all because, like I said, I never knew these things, and I've been learning, and wow, it's been mind blowing for me as well. But anyways, take care. God bless.